Zero Company acquired an asset on January 2nd of the current year at a cost of $572,000. The asset's useful life is 8 years and its salvage value is $104,000. Compute the depreciation expense for the first 2 years using the straight-line method. The formula for straight-line depreciation is cost minus salvage divided by the estimated useful life in terms of years. $572,000 minus $104,000 divided by 8 years is $468,000 divided by 8. $58,500 of depreciation expense is recorded each year. Depreciation expense in year 1 is $58,500. The journal entry is a debit to depreciation expense and a credit to accumulated depreciation. The balance in accumulated depreciation at the end of year 1 is equal to $58,500. In year 2, the journal entry again debits depreciation expense, $58,500, and credits accumulated depreciation. Accumulated depreciation is a balance sheet account. It does not get closed at the end of each year. Therefore, its balance accumulates to $117,000. Compute the depreciation expense for the first 2 years using the double declining balance method. Unlike the straight-line method, which records the same dollar amount of depreciation each year, the double declining balance method records the same rate of depreciation. The rate is calculated by taking 200%, the double, and dividing by the number of years, 8 years. This rate is multiplied by the beginning of year book value. The depreciation expense each year is equal to 25% of the beginning of year book value. In year 1, the beginning book value is the asset's cost, $572,000. We multiply by the depreciation rate of 25%. To calculate depreciation expense in the first year, $143,000. This brings the balance in accumulated depreciation up to $143,000. As the amount of accumulated depreciation increases, the book value decreases. The year-end book value is equal to $572,000 minus $143,000, $429,000. The book value at the end of year 1 becomes the book value at the beginning of year 2. $429,000 multiplied by 25% is depreciation expense in the second year of $107,250. The balance in accumulated depreciation at the end of year 2 is $250,250, $143,000 plus $107,250. The book value at the end of year 2 is equal to cost, $572,000, minus accumulated depreciation, $250,250. Year-end book value is $321,750. A decrease of $107,250 from the previous year. And finally, we're asked to calculate depreciation expense for the first 2 years using the sum of the year's digits method. The formula for sum of the year's digits is equal to the number of years remaining divided by the sum of the year's digits. We take the number of years remaining, and for an 8-year asset, we add 8 plus 7 plus 6 plus 5 plus 4 plus 3 plus 2 plus 1. The fraction each year is equal to the number of years remaining divided by 36. In year 1, all 8 years are remaining. The fraction is 8/36. We multiply 8/36 by cost minus salvage, $468,000. $468,000 multiplied by 8 divided by 36 is depreciation expense in year 1 of $104,000. Accumulated depreciation at the end of year 1 is $104,000. In year 2, there are 7 years remaining. The fraction is 7/36. 7/36 multiplied by $468,000 is depreciation expense of $91,000. Accumulated depreciation increases by $91,000 to $195,000.